Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Sales International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of these patterns, levels, analysis or any related items on these my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that,
LME 3-month copper. In January this year, I compiled and published my annual video commentary on LME 3-month copper. Please look at the YouTube index to find it. In this, I looked back and found a very relevant technical pattern for the actions seen since mid-December last year. That key piece of evidence, recreated here on this daily chart, is the bright red 2009 to 2016 bullish shift pitchfork, and the specific key piece is the bright red upper time, currently at 13,375. That sits just above the top of the market at the moment, and has capped, despite being significantly pierced on one occasion, that has capped a number of significant thrusts higher seen in January and February. Indeed, this is the key piece of overhead resistance and only piece of resistance seen here since the breakup and out of the recent showrunner for this market in mid-December last year, the July 22 to January 23 shallowly bullish shift pitchfork. So this leaves us with the question, what now? Well, there are two possibilities and neither of them is satisfactory. Indeed, I initially thought we might see the result by mid-February, as well as the likelihood of some false breaks as well. But I think this is now looking delayed, possibly very delayed. The first possibility was to look at the whole 2026 action so far as a possible complex top. This relied on an uptrend as a neckline, but that is no longer possible. And the best we can have as a proxy for a neckline is either the 50% Fibonacci line of November 25 to January 26 move at 12,571, or else in some way, I don't know quite sure how, but in some way the rising green short medium moving average currently at 12,676. But I'm not comfortable with this last idea. The second possibility is to look at this whole 2026 action as a possible hesitation, for a possible bullish halfway hesitation running from as far back as mid-November 2025 action. To be honest, this is even more unlikely. There's also a distant third possibility that the whole late December 25 to date action is forming a type of diamond top pattern. This looks at the moment, very shoddy and at worst pretty ridiculous. But I cannot deny I haven't thought of it. Until things start to clear, or get clearer, I'll stick to the idea that we have a training range between the 50% Fibonacci line at 12,571 and the bright red upper time above. What I think might be disturbing this equilibrium is the rising green short medium moving average, so I'd keep a close eye on that one. Now, one final point. This far along, the chances for a false break or breaks are very high. Please bear that in mind as well. LME 3-month aluminium. The markets break higher in early January, up and out of the late September to mid-November 2025 bullish shift pitchfork, was coincidental, and by the way, I do not think it is an accidental coincidence, was coincidental at the same time as a move up and out of the more longer-term bright red December 23 to July 24 bullish shift pitchfork. My reasoning for this is that if you were going to break higher, then it was best to smash two patterns close together, despite the additional resistance that may have, to better ensure a move higher rather than later when you had to deal with each one individually. They crossed over on Christmas Eve and the market punched higher soon thereafter on the 5th of January. Now, as I said 5 weeks ago, and I quote, there is the possibility the market may now move along the top of one or other of these upper tines, and it seems to wish to do that with the now broken upper tine, and that is something to watch out for. End of quote. This leads to the possibility of another, larger pattern that may be in the offing. This is not a very defined pattern. I don't think it has the required number of touches per side as yet, but we may have an April 25 to date very large rising expanding wedge pattern, outlined in bright green on my daily chart, currently 29.27 to 33.73. We are still within this pattern despite a spike higher 4 weeks ago that breached the upper trend line, but this breach has since been repaired. Hence, I suggest this is also one to watch. Another feature to watch for, and one that became evident to me on my longer term chart when compiling the annual video commentary, you can find this annual video commentary on the ADM ISI YouTube channel, is a very large November 2015 to April 2020 bullish Andrews pitch hook, which I've transposed onto this daily chart and highlighted in purple. The nearest part is the purple middle tie and above, which is currently at 34.09, just under the top of my daily chart. Now this is not a target level, but a likely resistance should we see prices rise again, as it sits close to the July 2008 high at 33.80. One final thought, and this one has some commonality with what is happening in the LME 3-month copper market, and that's to start considering if this whole 2026 action could be a possible diamond pattern. I'm not sure whether to consider it as a diamond top, a likely solution, or a diamond continuation pattern, a possible solution. It is to register this thought in your mind as well as mine. Now last week I said, and I quote, I'm considering running an optimized uptrend, possibly from late January or even as far back as November last year, just below the green short medium moving average, currently at 30.61. However, on reflection, why bother, as the green short medium moving average is doing a good job as a proxy for such an uptrend. End of quote. I have no qualms with keeping to that idea, keeping the green short medium moving average as a proxy for an uptrend for at least another week. LME 3-month lead. The recent key pattern here had been the original rectangle pattern that developed into the quite shallow early August to mid-October 2025 bull channel, which was breached on both sides in October and late November last year. And as I said 11 weeks ago, and I quote, enough that I no longer think this pattern is viable as a rectangle, end of quote. The recent break lower from this pattern halted in mid-December last year at the 38.2% Fibonacci line for the whole of the 2025 move at 1939. Forming a 3-day bullish morning star pattern and moving higher up to test the high of 2025 late 7 weeks ago at 21.05 and failing there. I suspect this failure was mainly due to the nearby 50% Fibonacci line of the May 24 to April 25 move at 20.98. Indeed, I think this caused this high, the high back in November last year, as well as the earlier high in January this year. Since then we have pulled back lower, down through the close-knit moving averages. They are really extraordinarily close. In the process, the market created a small January-based head and shoulders top and breaking below the dark blue neckline, which is currently 20.01, late 4 weeks ago. Primary target at 1964 was reached 3 weeks ago, but we still had the secondary, harder to reach target X1, down below at 1921, still open. However, as I said 4 weeks ago, and I quote, there's no real trend here. Just look at all the major moving averages. They are so still closely packed together. End of quote. And this is still the case now. As much mid-December last year, prices seemingly do not wish to push down through that 38.2% Fibonacci line at 1939. However, I do note the build-up over February into a possible double bottom. But this pattern has still not formed as yet. This brings me to my final point, and it's a point I have been making here since the start of 2025, and I'll continue to do so going forward. It has been, and still is to me, the most important point of all. So at the end of December 2024, we saw that 2024 had created a very large and rare annual key reversal down in LME 3-month lead. We haven't done that much since, and indeed prices are only slightly higher today than they were at the end of 2024. This is not an endorsement of the annual key reversal done, but neither is it a strong countermeasure or repudiation of it. Hence, I still say, even now, with prices where they are, that one should still look at all things going forward, in this coming year and beyond, in this metal in the shadow of this longer term bearish pattern.
Thank you for watching and listening. This Weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.